Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine headline inflation for June is seen to inch up while the Bangko Sentral is out with its forecast today as fuel prices are set to roll back this week. The outside view looking in on inflation, policy rates, and the economy with Sarah Tan of Moody's Analytics live from Singapore. Higher inflation turns Filipinos more pessimistic in the second quarter, says the Bangko Sentral, while local businesses were cautiously optimistic. We check in on what the foreign investors think with Marie Antoinette Mariano, Chamber President of the German-Philippine Chamber of Commerce and Industry. And U.S. President Trump says there will be no more extension to the tariff pause that ends on July 9. Philippine headline inflation likely inched up in June as stable food prices partly cushioned rising fuel prices. That's according to a Business World poll of analysts. The median estimate from 17 analysts puts June inflation at 1.5%, slightly faster than May's 1.3%, but still below the Bangko Sentral ng Pilipinas' 2 to 4% target range. If realized, this would be the fastest pace in 3 months, though slower than the 3.7% recorded in June last year. The Bangko Sentral ng Pilipinas is expected to release its month-ahead inflation forecast later today, while the June inflation data will be released by the Philippine Statistics Authority on Friday, July 4th. More Filipinos experienced involuntary hunger at least once in the past 3 months, according to the latest survey by the Social Weather Stations, or SWS. The hunger rate inched up to 20%, slightly up from the 19.1% recorded in the April 11 to 15 survey. Mindanao posted the highest hunger rate at 26.3%, followed by Metro Manila at 20.3%. Of the total hunger rate, 16.4% of families experienced moderate hunger, while 3.6% suffered from severe hunger. The survey was conducted from April 23 to 28, 2025 through face-to-face interviews with 1,500 adults nationwide. In an interview with One News Morning Matters, DSWD Assistant Secretary Irene Dumlao said the agency is taking these numbers seriously and is planning to scale up one of its programs.
The Department of Social Welfare and Development views this information, this latest study, with deep concern. That is why the DSWD continues to implement the Walang Gutom or the food stamp program. We're currently covering or serving 300,000 households, and we're looking at increasing the number by 150,000 by the second half of this year.
Moody's Analytics, in its latest note, expects the Bangko Sentral to take a measured approach to monetary policy easing. With us now for more from Singapore, Sarah Tan, economist at Moody's Analytics. So good to see you again, Sarah. Welcome back to the program.
Hi, thanks for having me back here.
So first, what do you make of the projected rollback in fuel prices here, just a week after they went up at the pump? Might what have had, in a way, had an impact on consumer sentiment, you think? Because we've witnessed for ourselves just how volatile global oil could be and upending purchasing power.
Yeah, that's a good point. In the recent past few weeks, we've seen up and down of oil prices, and even in the Philippines, the retailers and petrol companies are all reacting to that volatility. I think the higher oil prices that we've seen over the last couple of weeks is really that premium to guard against any permanent supply shocks. And now that there's been some kind of stabilization in tensions, we've seen those fuel companies roll back those hikes.
Yeah, if we just refer to the risk matrix in your latest report, but that was stated last month, where would escalation in the Middle East tensions be? Would you color it red or green in the risk matrix? Because what I'm seeing now is something colored in the green, and if I get it right, it's about the U.S.-China tensions.
Yes, so this is our risk matrix for us when we set our baseline forecast. We have this part in green, which is the US-China tensions, and this relationship between the US and China have kind of the tensions have eased over the last couple of months with the Geneva trade truce and the London talks that they had in June. Now with the Middle East conflict, that will definitely be in red. It will be a new risk for the global economy, and the Philippines is definitely not spared from that.
Indeed. So it would be red, but what about the other factors? I mean, would it still be in the green, the risk of China-US tensions? Because Trump just said he's not going to extend the July 9th deadline.
Yeah, so with all these developments, I think we might see the China-US tensions come to kind of another hot and cold situation, right? We might change it to just black, leaving it as where it is now today, with no further escalation in tensions. Yeah.
All right, it's going to be more difficult if one were colorblind, but let's have a look at your conditioning assumptions. That is a pretty interesting illustration there and articulation in the same note because it marries Brent crude oil with that of monetary policy rate assumptions. What are your findings here?
Yeah, so when we talk about the recent Middle East conflict, that could lead to higher inflation in the Philippines because as a net importer of oil, the country is vulnerable to disruptions in the global energy markets. So any increase in crude oil prices would then raise fuel and transportation costs, and that will then put upward pressure on inflation, and in turn that could delay the BSP's planned monetary policy easing, and then that will affect things like household budgets and potentially slow the country's economic growth.
So it's like a domino effect there, and I know that you've
It
got
is.
your inflation rate forecast for June at 1.4%.
Mm-hmm. Yeah, so we have it edging up slightly to 1.4% in June this month. In June. And there are two main reasons for that, I think. The first is that the cut in rice tariffs took effect in the second half of last year. And so now that we are entering into June, that year-on-year comparison won't look as low as they did earlier in the year. Right. And secondly, it's really due to the global oil prices that we just talked about. The conflict in the Middle East pushing oil prices higher, and we've seen at least for 2 weeks, Philippine retailers have already increased the fuel prices. And so even if they come down in the last few days of June, that's not really going to push down June's inflation by too much.
That's true, but what impact might it have on the Bangko Central's own inflation forecast range? It's out any moment now, and the Philippine Statistics Authority is going to follow that through with the official result this Friday.
Yeah, I think we have the consensus at around 1.5%, and so that range would serve as a good gauge for where we expect the BSP to put that month ahead inflation at. So I think we might see the middle point at 1.5%.
So you're expecting this measured approach from the Bangko Central. Given that you have inflation down at 1.4%, how many more rate cuts, if any? And if so, in which meeting? Is it going to be in August, October, or December, and why?
That's the million-dollar question. I think we have the BSP delivering one more rate cut by 25 basis points before the end of the year. Overall, I think there is still room for further policy easing to support economic momentum. And lowering this key policy rate would definitely ease pressures on household budgets and provide much needed relief to the domestic economy to help cushion the effects of challenging global environment. And the million-dollar question is really when this will happen. We think the odds are higher for an October or December rate cut and not in August. Firstly, because after 3 rate cuts this year, I think the BSP will want to watch how that is flowing through the economy, given how monetary policy easing works with a lag. And even though the BSP is not in lockstep with the Fed, it might still be appropriate for the BSP to watch what the Fed is doing before making its next move.
So no decoupling then?
It's hard to say, Katie.
Well, let me pick up an economic momentum. I know that my last reading is a 5.9% GDP growth from your end, but what impact is that measured approach going to have on Philippine growth now that the government's already cut its own growth goals to 5.5% to 6.5%?
Yeah, so in the past 2 months, we've brought down our forecast for the outlook for the Philippines GDP. We have it now expanding at 5.7% this year. and that is well within the government's recently revised growth target of 5.5 to 6.5%. Overall, the domestic economy will still stay rather resilient, and as inflation stays low and that monetary policy easing filter through the economy, that's going to support private spending. But really, a lot of that downward revision for us really comes from the external environment, and that's due to the tariff hikes from the US and potential slowdown in the global demand acting as headwinds to the economy, right? So if the negotiations with the US tariff freeze doesn't go through, we will see a 17% reciprocal tariffs on Philippine goods, and that's going to really cast uncertainty over the short-term outlook for exports and production.
Just as a final point, Sarah, what impact will the peso's level have on any of the assumptions you have?
Oh, that's a good point. So the weakening peso we've seen over the last couple of weeks, I think that is something that we are watching out for. It lost some ground recently after the BSP lowered their key policy rate. But I think the good news is that the peso has shown some signs of stabilization in the past few days, and really the main risk for the peso comes from external factors. And that's going to feed into decision making by the BSP when they consider, things like a rate cut.
Got that. So that's 5.7% for GDP and 1.4% for inflation. I'm all up to speed now, Sarah. Thank you so much.
Thank you.
Appreciate the time and your insights. Sarah Tan of Moody's Analytics in Singapore. You're watching Money Talks. Coming right up, U.S. President Trump says there will be no more extension to his global tariff pause. And a survey by the Bangko Sentral shows Filipino consumers were more pessimistic in the second quarter. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. We have this developing story from the U.S., an active shooting in Idaho. Two firefighters responding to a fire died after they were shot by an unknown number of assailants. Kootenai County Sheriff says other civilians may have been caught up in the incident. Authorities are looking into whether the fire was intentionally set to lure the firefighters. Stay tuned to our social media pages for updates on this developing story. Meanwhile, as the clock ticks toward the end of the 90-day tariff pause, U.S. President Trump has signaled he is not keen on extending the reprieve. The pause is set to end on July 9th. And while the president aimed to reach 90 trade deals in 90 days, the U.S. only entered agreements with a few countries, such as China and the UK. As for the Philippines, which is facing a 17% reciprocal duty, the Marcos administration is optimistic that it could bring down U.S. tariffs on Filipino goods to zero. In an interview with Fox News Sunday Morning Futures, Trump set out a new metric to determine the level of trade penalties per country.
We'll look at how a country treats us. Are they good? Are they not so good? Some countries we don't care. We'll just send a high number out. But we're going to be sending letters out starting pretty soon. No, we don't have to meet. We understand. We have all the numbers. Listen, what we're going to do is we're going to send, and we're going to say, congratulations, we're allowing you to shop in the United States of America. You're going to pay a 25% tariff or a 35% or a 50% or 10%.
The S&P 500 and the NASDAQ hit all-time highs Friday, recovering from April's tariff-induced sell-off. The S&P posted its swiftest recovery on record, closing at 6,173, surpassing its previous peak of 6,147 on February 19th. Within 89 trading days, the index returned to a closing high after declining by at least 15%, the fastest since 1998. Meanwhile, optimism in AI and prospect for looser monetary policy drove the NASDAQ to an all-time high of 20,273, surpassing its previous peak of 20,204 on December 16th. The tech-heavy index entered bear market shortly after Trump's Liberation Day announcement on April 2. Since its recent lowest close on April 8th, the NASDAQ surged by 32% and is now on track to confirm a bull market. Amid the market surge, NVIDIA insiders sold over $1 billion worth of company stock in the past year as executives capitalized on surging interest in AI. According to the Financial Times, more than $500 million of share sales took place this month as NVIDIA's share price climbed to an all-time high. The chipmaker reclaimed the crown as the world's most valuable company on Wednesday. Just to recap, U.S. markets ended Friday's session higher across the board. The Dow rose by 1%, and both the S&P and the NASDAQ climbed by over 1% each. Benchmark 10-year Treasury yield settled to 4.283%, and gold prices inched down to $3,273 per troy ounce. As for stock futures, they're rising as investors capped the month of June with record highs. The Dow climbing by nearly 0.5%. S&P gaining by nearly 0.25%, and the NASDAQ inches up by 0.33%. As for Asian markets, they're up in the first hour of trading here Monday. Australia's ASX 200 climbs by 0.1%. South Korea's Kospi rises by nearly 0.7%, and Japan's Nikkei 225 gains by over 1.5%. And history unfolds at the NASDAQ after Hotel 101 Global becomes the first Filipino-owned company to be listed and traded on the U.S. index. The company celebrated its public listing by ringing the opening bell on Friday's session. Its shares are set to begin trading on Tuesday, July 1st, under the ticker symbol HBNB. Hotel 101 Global has been listed as a result of its business combination agreement with JVS Pac Acquisition Corp, valuing the company at an equity value of $2.3 billion. In her remarks during Friday's ringing, Hotel 101 Global CEO Hannah Lucchini said, the company's listing marks a bold step toward building a global legacy anchored on the excellence and warmth of Filipino hospitality. She said this is a moment for every Filipino who dares to dream big. Lucchini underscores her company's long-term goal of having 1 million rooms in over 100 countries worldwide, with 3 existing overseas projects located in the U.S., Japan, and Spain. With more markets in the horizon, she said, Hotel 101 aims to disrupt the global hospitality industry and become one of the world's leading hotel brands. Let's take a quick check on our own markets here in the Philippines, with the benchmark PSEI opening this Monday higher by about 0.1% to 6,414. Philippine shares finished last week with gains inching up by nearly 1.25% to return to the 6,400 level. All local counters were in the green except for mining and oil, which tumbled by over 1.8%. As for the Philippine peso, it opens today slightly stronger at 56.54 to the dollar. Peso closed Friday a tad weaker at 56.57 against the greenback. Business sentiment in the Philippines softened in the second quarter amid concerns over impact of Trump's tariffs on the economy. That's based on a new survey by the Bangko Sentral ng Pilipinas. The latest business expectation survey showed overall confidence index for businesses declined to nearly 29% in the second quarter. That's down from 31.2% in the first quarter and 32.1% last year. It's also the lowest recorded since the fourth quarter of 2022. The survey was conducted from April 4 to May 19 with responses from over 1,500 firms nationwide. Meanwhile, Filipino consumers were more pessimistic in the second quarter, citing higher inflation, reduced income, and fewer job opportunities. The survey showed confidence index in the second quarter fell to 14% from 13% in the previous quarter. Still, the consumer outlook for the third quarter turned positive. Philippine companies remain cautiously optimistic about their business outlook over the next 12 months, identifying the Philippines as a strategic destination for growth despite ongoing global and domestic challenges. That is according to the Chamber Spring 2025 World Business Outlook Survey. With us now for more is Marie Antoinette Mariano, Chamber President of the German-Philippine Chamber of Commerce and Industry. She is also BDO Unibank First Vice President and Head of the Europe Desk. Well, good to have you, Marie. Welcome to the program.
Good morning, Cathy, and thank you for the opportunity. Glad to be here and be able to meet you as well.
And also congratulations as you've marked your first year in office as Chamber President. You're the first woman to handle this important and pivotal position. How's it been so far?
Well, it's a privilege and of course an opportunity for every Filipino, especially for a Filipina, to be in a bigger scale and contribute more than just the daily job that we're doing, but of course more onto the economy and creating a lot of connection, of course, with foreign direct investments.
Right, and the survey puts us right front and center into the expectations of the German firms coming here to the Philippines. The Business Outlook Survey, it came out in April, but the results very relevant and the kind of output that we've seen among German firms. Just connecting that with what I just read earlier about the Bangko Sentral's consumer and business expectations, how does cautious optimism play into that assessment by the Bangko Sentral, and how are you seeing it from your end as Chamber President?
Based on the AHK World Business Survey, we've seen a growing optimism on the front of the German businesses operating in the Philippines. I'd also like to highlight business expectation, which is really very high. And comparatively over the ASEAN neighbors, we have a very high score, which is also very good for the Philippines. This also creates more traction. I was in Berlin attending the AHK World Conference, and the overarching theme is off to new market. The German companies abroad are being pushed to look for strategic partnership outside of traditional market like US and China. So they're really pushing them to go in the ASEAN region, of course, MENA and South Africa. In fact, we have a business delegation last week on renewable energy, and I'm very happy to note when I was speaking to one of the delegates, that company delegate was part of the business roundtable discussion when President Marcos was in Berlin. So you could also see that the eyes is now in the Philippine front. So,
well, let's put that into context with the word cloud that your survey had come up with. Very interesting that you conducted this survey between March 17th and April 11th. And this is a word cloud that's come up. A lot of words there. But really the overriding risks include global recession, US tariffs, tariff impact, tax audits. But that was before the midterm elections of the Philippines, the cabinet revamp, and the congressional issues that Trump faced because of his tariffs and the volatility in oil because of the escalation in the Middle East. If you were to go back and speak with the German firms, and you may have in these weeks that have passed, what would be their overriding word cloud, you think, as the main risk or risks?
One would be because the Philippine elections is done and that we had installed a new government. Number one would still be bureaucracy, the ease of doing business. That has been always on the table of the German companies whenever they do business here. We've worked with the Anti-Red Tape Authority on providing platform, which we call German-Philippine Business Action Portal, where they lodge concerns. And happy to say that 100% resolution is there. Another one would also be the geopolitical tension that's happening. Of course, this also impacts their businesses, especially those who's into exports and imports. With prices of energy would be affected, of course. Rise of raw materials also would be one. But overall, it's really the ease of doing business in the country.
And that's quite surprising because without these tensions in the Middle East and all that, things remain the same. It's really the ease of doing business. Yes. But there is a European Free Trade Agreement that we're hoping to sign off on.
Yes.
And the fourth meeting is in October and it's happening in Manila. What is the Chamber doing to ensure that this goes through? Because very important to the whole equation is to diversify.
Yes, right, Cathy. In fact, if we do look at the survey, there are highlighted risks. One would be economic policy uncertainty, fluctuating demand, and rising raw material costs. We've seen that the EU-Philippine Free Trade Agreement would be a mechanism to make it more stable, to open more avenues for German companies and other European companies to look into the Philippines and diversify. This will also help with the EU integration and a stable trade environment. So we had discussion on this, and we heard that this is going good and fast, so which is very happy for us, especially in the Philippine front. So.
Could it be the final then, the fourth and final negotiation?
We're hoping
in October.
We're hoping that for that, Cathy. And the sooner that we put this on the table, the sooner all these foreign direct investments will rise in the country.
All right, we'll have you back in October before then for some certainty here in the Free Trade Agreement. Thank you.
Thank you,
Appreciate
Cathy.
it very
Thank
much.
you.
Maan. And that was Maria Antoinette Mariano of the German-Philippine Chamber of Commerce and Industry. And before we go, Filipino tennis Alex Ayala has climbed to a career-high world number 56 in the latest WTA rankings. The 20-year-old rose 18 spots after a breakout run at the 2025 Lexus Eastbourne Open, where she finished as runner-up. Ayala fought her way from the qualifying rounds to her first ever WTA final, upsetting several higher-ranked opponents along the way. In a social media post, 22-time Grand Slam champion Rafa Nadal praised her performance, saying, "This is just, quote, the first of many finals." President Bongbong Marcos also extended his congratulations, calling Ayala's feat a record for the nation. Her previous best ranking was world number 69 back in May. She now heads into Wimbledon, where she's set for a first-round clash against the defending champion. Wishing her all the best, and we're following through on her successes. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.